I'm going to go right out over my skis, and Lisa's going to chuckle and put up a golden cross, which I think I know what it means, all right? And this is, I know you're going to chuckle. So, but this is fascinating to me because this happened. We've got now the 50-day moving average, that pink line moving above the yellow line, which is the 200-day. You see the S&P well above both. Does that indicate that actually this is not complacent at all, that in fact the market has a ways to run here?
Yeah, so welcome to late cycle, right? So you had the worst December since 1931, best first quarter in over 20 years since 1998. So where do we go from here? Of course, right? So, and you've mentioned the curve. You can look at rates two different ways. Are rates saying that things are going to slow down, so get out of equities? Or is it like the past decade where rates are telling you these are very accommodative financial conditions and the path of least resistance is higher? And we would go that way. And I think one of the biggest drivers here is not only have earnings forecasts in 2019 been slashed, okay, only 4% on the S&P. I mean, that's very, very low. But the consumer, you can make the case right now, David, that the consumer is the healthiest they have ever been in this cycle. Three reasons. One, the stock market is 2.5% from all-time highs. So there's a wealth effect. The second thing, there's average hourly earnings, highs of the cycle, and we'll get another print on that on Friday. Third thing, though, that's really important, very different from the last recession, debt service. The consumer's debt service ratio is the lowest it's been since 1980.
Thank you to the Federal Reserve policies, among other things. So, David, this raises a question, which is how long can this last? How long can we be in this late cycle euphoria?
You know, Herb Stein was a great advisor to a president, and he said, when the president said, "You keep saying unsustainable, what does it mean?" And he said, unsustainable means things continue until they stop. And it was as simple as that. Phil gave a great summary. We don't need the rest of this show. We're north of the grass, the sun is shining, let's have a party. A few little things, a few small little things. You have a Harry Potter scenario unfolding in the UK. We don't have a clue where this goes. We don't know the impacts of Brexit. We don't know what Brexit is. We don't know what the 20% of the world's economy, the largest bloc, the European Union, will do in response. And we have this bizarre situation in debt where Italy, long-term debt, trades with a yield below the United States of America. Last time I looked, there's a little difference in credit quality. And the interest rate set by the policy-making central bank of the United States is 2%. And the inflation rate in the United States, variously measured, is around 2%. And that means the real interest rate is zero. And it's been zero for a long time all over the world. This continues until it stops. When it stops, people won't like it.